Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the weekly time frame where potentially this wave 4 is finished as we are looking for a double 1, 2, 3, 4 and then a continuation to the upside in a wave 5. In this scenario, the common target area for a wave 4 is between the 236 and the 0.5 Fibonacci, taken from the low to the high of wave 3, giving you a target area between 63.3k and 53.3k, with the invalidation being the 0.618 at 49.3k. Here we then want to see price move impulsively to the upside for this wave 5 to finish the yellow wave 3, after which we can expect a multi-month range in this wave 4, after which we then want to see continuation again towards the upside to finish the final wave in a wave 5. The bearish scenario is a big move towards the downside, currently lower probabilities for multiple reasons. One of these is that this then has to be at the moment a regular flat, where the regular flat wave B target is between the 1 and the 105 Fibonacci from the high to the low of A, and a regular flat is a less common flat pattern compared to an expanding flat, where the expanding flat wave B target is between the 1.236 and the 1.38 Fib, taken from the high to the low of A, sitting between 98k and 122k. Also locally, if this would be the high of B, we are looking for a move towards the downside for wave C. We want to see impulsive structures because this is a 3-3-5 wave move, W, X, Y, X, Z, A, B, C, and then you want to see an impulse to the downside. However, locally, there's currently no strong signs for any impulsive structure to the downside, also lowering the probabilities for this scenario. Now, the wave C common target area is between the 1 and the 1.236, taken from the high to the low of A to the high of B, with the trend-based Fib extension tool sitting between 16.5 and 11.6k as a target, and the 1.618 is at 6.5k, which is an extension target for wave C. The best support is between 10 and 9k. We have the golden pocket from the low to the high, as well as the multi-year volume profile with the value area high in the middle of the golden pocket. So if you then look locally at the bullish scenarios, as these have higher probabilities, then here we have a finished regular flat structure, 3 wave A, 3 wave B and a 5 wave C to the downside, which is finished on the common target area for wave C, which is the 1-to-1 taken from the high to the low of A to the high of wave B with the trend-based Fib extension tool. If that is the low of wave C, then locally we are looking for price to continue its way towards the upside, where preferably your at least first 1-2 is finished in green, wave 1, wave 2 looking for wave 3, and potentially also your second 1-2 is finished. This wave 2 in time could still extend to into a flat, but if we take the fibs for a flat from the start of wave 2 to the end of wave 2, toggle on the expanding flat fibs, then you can see we are getting very close to the 1.618, which is an uncommon target for wave B in a flat. So it lowers the probabilities for a flat in this wave 2, which therefore increases probabilities that in a double 1-2 scenario, your wave 2 here is already finished. Now here we then have a 1-2-1-2. Eventually we expect a bigger wave 3 to the upside. Of course, one could get another 1-2 before continuation, but the invalidation at the moment, I put it here on the first wave 2 at 62.9k. Of course, once we get even more confirmation that this is a potential second 2, the invalidation will move towards the upside here. Now the 3A2 for the first wave 2, less common target, but in a strong trend, it is a target nonetheless, and the 0.5 is a common target for a wave 2. A minimum target for a wave 3 is usually the 1.618, which is taken from the low to the high of 1 to the low of the wave 2 here, color-coded in bright green at 72.5k. However, a wave 3 does tend to extend to much higher prices. If we then also put Fib time on my chart, then these Fib times you see on the chart are taken from the low to the high of the second wave 1. And then double click over here to compare blue 1 with blue 2. And you can see that the low of wave 2 here is made after the 0.382 Fib time, which is nice to see, as that is also most common for a wave 2 to exit or to end after the 382 Fib time. However, as you can also see, we still have a lot of time left just in case. Again, the probabilities aren't great for a flat because we almost hit the 1.618, but you do see that if it does come down, at least time-wise it would be valid. Now the alternative bullish scenario here is a diagonal, where also Stuba posted this in the group actually last night when I was for dinner, because we celebrated 10k. Thanks everyone for your support. I eventually at the end, when walking back, was checking Discord, I saw the diagonal, which is indeed a scenario I can now put on my chart as price took this high. So that is what I was waiting for, to show a diagonal. We then have a 1, 2, 3, 4, and then wave 5 taking the high of wave 3. Now in this scenario, this wave 3 is very short compared to wave 1. So if you take a trend-based fib from the low of 1 to the high of 1 to the low of 2, toggle on the 0.618, which usually is a minimum target for a diagonal wave 3, you can see we didn't hit that target. Now the minimum rule is that a wave 3 in this case would move above wave 1, which it did. So it's not like an invalidation, it just has an effect on the probabilities. Now wave 5 is not allowed to be longer than wave 3, as wave 3 is shorter than wave 1. We want wave 5 to be shorter than wave 3. So therefore the invalidation is the 1-to-1 taken from the low to the high of 3 to the low of wave 4, sitting at about 67k. So if price is moving to the upside and hits 67k here, the diagonal that you see on my chart here becomes invalidated. The bearish scenario on the 4-hour chart remains this one as long as the 618 isn't touched. I will continue to show this one. The 618 is the hard invalidation for a wave 4 and a 1, 2, 3, 4, 5, but every day the probabilities for this scenario go down. They're already very low because of the sub-degree structures and how we count this area over here. But 67.3k, the 0.618, important if you hit that invalidation for this wave 4. Time-wise, we are now also ranging after the 5 fib time, and it doesn't look close to any ending of a sub-degree wave 4 here and a move down in the wave 5 at the moment. So the probabilities aren't great. To give you a little bit of a heads up, the moment we do hit this level at 67.3k sooner or later, then this scenario of course becomes therefore invalidated, but then the bearish scenario is going to be this finished flat, right, where we then have this A, B, C regular flat, but this is going to be either a wave A or a wave B. So just a little bit of analysis in advance, I suppose, where if you hit 67.3k, we're either looking for a wave B or a wave X, and then another either wave Y, right, or a wave C. So that is going to be the bearish scenario the moment we're hitting 67.3k. Now on the 50-minute, bullish CVD divergences kept building over here, right, and all of these bullish CVD divergences have now played out as we took these highs, so that is good to see. And when we look at some support and resistance areas on my chart, we had resistance here. We are now grinding the upper side of the box where we do have a naked point of control, which apparently I removed already, but we had a daily naked point of control here at the absolute high of the box, which is pretty much where we are ranging at the moment, right? So we might actually flip this resistance, see what price does here. But again, 67k and 67.3k are very, very important levels for the impact of the different scenarios on the probabilities. Then we also have some resistance to the upside here, another blue box, 68 to 69.2k. Then we have 70.7 and 72k. To the downside, bit of support around 63.9k, and then we have 61.7k to 62k. So if we then look at the probabilities of the different scenarios, then on the weekly time frame, the probabilities are highest for the bullish scenario compared to the bearish scenario. On the 4-hour time frame, which is this range over here, the probabilities are highest for a finished flat structure with C being in and looking for price to move towards the upside, compared to the bearish scenario with an unfinished flat. And on the 15-minute, currently the probabilities are highest for a double 1-2 invalidation at 62.9k. On number 2, we have the diagonal 1, 2, 3, 4, 5 invalidation 67k, and on number 3 we have new lows. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.